Welcome back. And as promised, Devang Mehta from Spark Capital Private Wealth is now joining in to discuss the markets and some of his top ideas. Devang, good morning. Thank you for joining in. The conversation all around has been with the IT results that we have reported so far, and they flattered to deceive, to say the least. Now, would you believe that, okay, the first half might just be the bottom that the sector has been looking for a while now, and then we start seeing growth from the second half courtesy of the low base?
Good morning. Thanks for having me on the show. I think clearly the last 1.5, 2 years, we have been a bit underweight on IT, to say the least. In fact, actually has not favored the large cap IT sector all through. Now, the reasons for that are clearly there are more headwinds than tailwinds, as we all know. Somebody who probably grows at a single digit, and just because the valuation has collapsed from what it used to trade in terms of its P multiples, I don't think it makes a sort of a bargain hunt. There are so many sectors, there are so many themes, there are so many micro themes in India which are doing well. So I guess that buying it at a value zone somewhere, but with no growth, it would just probably be a bounce back or a momentum which would just sometimes come into the proceedings. But otherwise, I don't see any such reason. Maybe the commentary and the body language are still weak. People are guiding towards lower margins. Yes, I can't paint the entire picture for the entire sector. One can be selective, but ideally, as I said, there are more domestic-centric stories than something where you need to depend on exports. And I think a lot of innovation will go into the proceedings. The typical software exports, I think people need to innovate. They need to sort of get into digitalization, which a lot of companies are doing. But I am not seeing a lot of revenues coming out of those two streams. So as I said, I'll not be very bullish on IT per se. Yes, at some price points, some valuations, it would become attractive, but not a conviction buy at all.
Got that. But what about mid-cap IT? So if the big concern with frontline IT for not buying is that there is no growth, but many mid-cap IT companies are giving you growth. But here the valuations are expensive. So what are you doing with mid-cap IT? And which IT stocks do you have in your portfolio? Or is it a zero exposure?
Yeah, so ideally, as I said, I have a zero exposure towards the IT stocks.
Zero.
But a stock like L&T Technology Services, just an example, LTTS, right, which is not a pure play IT. You would understand it's more digital, it's more AI, it's more ER&D. If I could make a point, I think these are companies where you will have lumpy quarters. But this is where the growth will come in, right? People want to improve their efficiency, their productivity. These are innovation-driven companies. So my sense that somebody wanting to buy pure play IT can probably wait for some time and have companies like L&T Technology. I'm not suggesting, as I say, but it's a portfolio company that we hold for a lot of our clients. So that's an interesting play that one could probably look into.
Got it. Devang, you also mentioned that you would be looking at some proxy plays when it comes to consumption, when it comes to some of these broader market themes. Can you explain the reason to us, and which are some sectors that you are liking currently?
Very interesting. I think, see, what has happened is today, if you probably buy something in the benchmark indices, particularly Nifty or Sensex, we all know that 35% is the traditional financials that you get, 14-15% IT, 8-10% is the traditional oil and gas, and again, 8-10% is the typical non-discretionary consumption type of ideas. So 65-70% of Nifty is spread into this. So I think it's very important that one focuses on the broader market. In broader market, there are so many interesting themes, right? From discretionary consumption, of course, we know which is on the rise since COVID days. It's sort of slowed down a bit, but again, it seems on the up move. Most important part of this broader markets is where I use a word, and I've been repetitive over here, is something driven by capex. Now, by capex, I mean the entire capital expenditure that the government is doing. The private sector is probably also started to jump on the bandwagon. Now, the LIs and the proxy plays here are the last mile proxies. Be it power automation, be it liquid insulation, be it engineering, be it ER&D, which we talked about. There is lamination, stamping, casting. These are certain companies which are sort of never present in the Nifty at this point. But whether in the next 3 to 5 foreseeable years this will be part of indices, some of these companies will be part of indices. I think there are a lot of proxy plays here where you get one, ordering activity, second, the execution has picked up. Most of these companies have sort of reduced their debt, or all these companies are debt free. Every incremental capital that is generated over here is put to work and generates more ROE. So my sense, a confluence of factors, be it lower inflation, be it supportive RBI, be it government policies, be it sentiment, liquidity, I think is making that domestic-centric stories and the broader market stories more interesting towards capex, towards discretionary consumption, and some towards even financials, or I can say lesser known financials, which are proxy plays of financial penetration and density.
Since you're on the subject of proxies, what about the capital market plays, Devang? How would you play that theme? Would you play it directly from an exchange like BSE? Would you use the depositories like CDSL? Or would you use the asset managers or the likes of the HDFC, AMCs and the Nuamas? Where does your preference lie within this space?
Honestly, we find this entire space, the names you talked about, the sectors or the subsectors or the micro themes you talked about, all look interesting. But if you ask me today that what are the favorites over here, clearly we feel that the depository participants, exchanges, now clearly there is a duopoly, there is a sort of a oligopoly in this, and you know that there is a durable competitive advantage available to this type of companies where there are ROEs, there are ROCs, there is a bit of pricing power, there is a bit of moat which is available in this type of businesses, and we know that the penetration is going to rise, right? With 18-20 crore demat accounts are going to rise. You see a lot of capital market activity. You're seeing IPOs, you are seeing OFSs, you are seeing deals happening in the market. So I think the entire space, right from millionaires to billionaires, by the hour we see the market size increasing. There's a huge size of the opportunity with companies having dominant market shares, and consolidation is going to happen in this type of a space. So my sense, yes, a lot of these financial proxies, ex-banks look very interesting. Yes, banks will do good, but that would be around 10, 12, 14% type of growth over a period. But this financials, the financials that we talked about, the intermediaries, they could probably grow at 18, 20, 22%, and more the merrier, that type of growth.
Got it, Devang. Thank you so much for joining us with your insights and telling us which sectors and stocks or themes could be in focus going forward as well. By the way, for the markets, it's a 140-point uptake. The mid-caps have also picked up pace. It's up around 0.7%. And it's really the pharma space or the chemical space, so to say, which is doing really well. So we have something like a Rosari Bio, which is up 6.5%. Aether Industries is up 5%. RCF, NFL, India Pesticides. So this theme continues to do really well in trade. So we'll have to see which way things go as far as the Q1 results are this time around for these names. But we'll slip into a break now. As we do that, here's some good news for our viewers. India's business news leader is now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.